Good morning, good morning, good morning, everybody from the Cozy King himself. Welcome to today's pre-market prep session for November 15th, 2023. I'm your host, Adam Holland, stock options expert market strategist, and resident cozy boy. Was feeling like being cozy again this morning. I've got the fan on and the AC on in my office, but sometimes you just want to feel bundled, man. Sometimes you just want to be bundled all on up. Plus, I mean, it led us to a nice, stunning victory yesterday in markets with Tesla, AMD, PENN, SPY, what else? BAC, all coming through to fruition for a nice, big, bankable Tuesday yesterday. And we're looking to bring that same momentum here into hump day. So I'm excited to get after it. We got PPI numbers this morning. So we'll be going over that. As always, make sure that you put your one in the chat. We're here to get 1% better each and every day. That is our goal, right? So, yes, we go over news. Yes, we go over data. Yes, we go over potential trades. But we want to make sure that we're getting 1% better each and every day. 1% better with patience. 1% better with execution. 1% better with technical analysis, right? We don't have to change the world in a day, but if we can get a little bit better, then we had an amazing day. And that comes through in days like we had yesterday, right? Where it's just you have, 250 to 300% plays on Tesla. You've got multiple different great plays coming through on BAC. We got, more expensive positions. We got cheaper positions, literally something for everyone, which is what I love so much about the market, is that there is something for everyone. Like, there's so much opportunity to take advantage of. You want to make sure that by getting 1% better, you're there to get your piece of the pie. So our top news here, cheers. Investors are bringing out their champagne glasses to celebrate the latest CPI report, which was clearly a shock to the consensus as the rate of inflation fell more than expected in October. Stocks soared and treasury yields tumbled after headline inflation flatlined month to month, an impressive feat that has so far excluded the start of a recession. Core inflation numbers were also striking, with the figure climbing by a lower than expected 4% year over year to the lowest reading since September of 2021. So, people excited, right? I mean, this is news that was expected. One of the reasons why we swung calls, if anything, overnight there, and what led to those calls crushing it so much. In terms of seeking alpha commentary, I've been preaching for the past year that the rate of inflation would fall as fast as it rose, and this report supports that assertion. Investing group leader Lawrence Fuller, author of The Portfolio Architect, wrote to the applause of many subscribers. Quote, today's report ends the discussion of rate hikes and should also end the discussion about rates staying higher for longer. It looks like the little guy was one step ahead of Wall Street this time around. The professional money management community has been extraordinarily bearish as of late, which means there is plenty of fuel left for our year-end rally. That couldn't be seen any clearer than the latest 13F filing from famed big short investor Michael Burry. While the quarterly filings don't signal exactly when he exited his Q2 stake or outline precisely what hedge funds are up to, Burry's Scion Asset Management said it no longer held 2 million in puts on the S&P 500, which is SPY, right? S&P 500 ETF, and 2 million puts on the Invesco QQQ Trust, which is QQQ, which totaled about $1.6 billion. The bearish bets follow many forecasts by Burry in recent years that predicted, quote, the mother of all crashes, in rhetoric that referred to the current market environment as the greatest speculative bubble of all time by 2 orders of magnitude. And, quote, as I said about 2008, is like watching a plane crash. So I think it's funny because Burry also already made his money. Like, when we talk about the crash, when he went short was right before we took the next significant, what has now turned into a significant leg down. Was it anything like 2008? Absolutely not, right? But I think for you to say that he didn't succeed in those puts makes no sense, because he definitely made a good amount of money with those puts. He was in it. The filings are late, right? So it's like the same thing with Inflata. We get inflation data, right? I turned that into Inflata. We get inflation data after that month has happened, not during the month. It's the same thing, right? He was in that trade before we heard about it. And he was out of that trade before we heard he was out of it. So I think, it's just wild when people are like, oh, haha, you're wrong. And it's like, He perfectly timed the drop because he was into puts before the drop, and the drop concluded, and he was out well before the drop concluded. So even though he does, typically like overly stoke fear, I'm sure he made out like a fat cat here on this short, since that's something that we did ourselves. We didn't have anywhere near $1.6 billion in puts. Wish I did. That would be amazing. What to watch? The market's celebration saw the Nasdaq exit correction territory on Tuesday, with the Magnificent Seven adding more than 200 billion to their market caps. But it wasn't just the elite group of tech stocks. Small caps, which have lagged their large cap peers in 2023, also played some major catch up over the session, with the Russell 2000, whose ticker is IWM, closing up 5.4% and lifting the index into positive territory for the year. Following the enthusiasm, Lawrence Fuller had one more insight to add when sizing up Fed speak ahead of the last FOMC meeting of the year. Quote, Powell has to keep the hawkish bent for fear that what is happening today continues, a melt up in stocks and collapse in market rates that can be inflationary. So I agree. Powell's got to maintain this tone. He's got to maintain this posturing, even if they do decide to do something that's a little bit more bullish, like cut rates eventually, right? In 2024. Right now, it's expected that they do so in like May, I believe it was, that we talked about yesterday. So we'll see if that ends up being the case or not, right? It may not. We will 1000% just have to keep our ears to the streets like we always do. But regardless of whether or not we end up getting bullish movement, bearish movement, you know where we're going to be, right? On the right side of it for the most part. There's not all times where you get it right, but that's the thing. You get knocked down, you just get back up, you adhere to the system, and overall you win more than you lose. You win in a higher magnitude, and you can keep it pushing, right? Just like what happened on Friday. Tough day on Friday, follow that up. Pretty solid day on Monday. Super solid day on Tuesday, right? And the super solid will always outweigh the bad days, right? You could just crush it with a higher magnitude, and you're right back with the lickety split. In terms of economic news here, kicking the can. We're here again, guys. We're here again. U.S. House lawmakers have passed a temporary spending bill in a win for the newly elected Speaker Mike Johnson. The bill will now go to the Senate for a vote, where it is widely expected to pass. Senator Majority Leader Chuck Schumer lauded the measure that excludes hard right partisan cuts and poison pills with a stronger bipartisan vote. While the hardline Republican Representative Mike Garcia said that it wasn't ideal, quote, but a shutdown is far worse of a world to be in. The two-part stopgap bill would fund some government operations through January 19th and the rest through February 2nd, meaning there could be another shutdown deadline on Groundhog Day. That'd be really annoying working for the government. And just like it seems like every few months, they're just like, hey, you might not have a job anymore, or you might not get paid. Like, what? That's why you always got to have some amount of control over what's going on when it comes to your money, right? I can't control whether the government continues to fund my program. I can't control whether or not the government continues to keep me around, or whether or not they can get it together long enough to make sure that my salary is secured. But at the end of the day, I can take the money that I do have and make sure that I can multiply it, right? Flip it and tumble it, so that if they want to fool around, that won't affect me, especially heading into an important holiday season, right? Where everybody's got bills, everybody's got traveling, everybody's got all this stuff going on. So yeah. In terms of financial news here, Wall Street South, noting that Florida has an environment that encourages growth. King Griffin, founder of hedge fund Citadel, believes Miami could eventually replace New York as the world's financial center. I believe that too. 1000%. Miami is insane right now. I've got tons of friends that have moved there. I've got, friends in the commercial space down there killing it. Miami, has a lot of advantageous tax breaks. They're super open to change. They're like a self-proclaimed haven of crypto and everything new. And I'm pretty sure they'll probably, or they probably currently are working to integrate AI like heavily into the city. So I think it's possible. Major Wall Street firms have been shifting to the Sun Belt in recent years on account of lower taxes, cheaper real estate and labor, and warmer weather compared to New York. Citadel already moved its global headquarters to Miami from Chicago in 2022, close on the heels of hedge funds owned by Carl Icahn and Paul Singer relocating to Florida from New York. The exodus of big money can also have other big implications, like billions in tax revenues paid to states. Maybe it'll finally be, I guess, wallet friendly to live in New York. Who knows? So let's check out this PPI data. Mm. 'Cause yesterday we got CPI. Today we have PPI. CPI is the consumer price index, right? Measuring inflation when it comes to consumers, you and me, and the producer price index is measuring inflation when it comes to producers. So all these companies that produce these goods that we consume. Let's see. So US, oh, we got retail sales, US retail sales, actual down 0.7%, excuse me, 0.1% versus 0.7% previously, estimated being down 0.3%. So retail sales got good numbers for retail sales. Producer prices, final demand -5%, consensus +1%. That's good. You want to see demand down. PPI, excluding food and energy, consensus +3%. US October PPI personal consumption down zero point 0.6. US September PPI final demand revised to 0.4% from 0.5%. So I need to go ahead and look and see if I can pull up how the market is moved in response to that. I have not opened Thinkorswim yet here on my machine, so I'll open it really quickly on the phone. See what we got going from there. All right, what's happening, Spy? Looks like upon that data dropping, we dropped, and now we're kind of popping a bit off of that 449.73, directly off of that 449.73 area that we've been watching, right? That we've been taking note of. So I think that's very important. Right now, it looks like we've got like a kind of like a right angled wedge. Um, like this, where we've got the kind of 45-degree angle coming down, and then we're sitting right on top of 449.73. So yeah, let's see what we end up getting right from here. This could be, a bear flag. We get the drop, we get the pop, and then we head lower from here. But we'll have to see. We hit right off of that previous daily resistance at 451. That's where we topped out like just now before that data came out. And initially, when the data dropped, we popped up, but we held at that previous daily resistance at 451, and now we've dropped from there back down to 449.73. So we'll see how everything shakes out, but for right now it looks like the market, as of the initial move, like either isn't liking the data, or that 451 is just so strong that it's just smacking us right back down, as we try to push. But so far we've held at strong support that we had previously, so we'll see what happens, right? Which one breaks, but at the end of the day, either one goes down, we're looking to profit off of it. In terms of like where we are with today's markets, no real reason for me to read this because it's all changed now that the data has come out. So I'm going to finish up with our rapid fire stock news rundown. We've got Home Depot, ticker HD, beats even as customers opt for smaller projects. YouTube will require creators to disclose AI generated videos. Amazon, ticker AMZN, to run in-app shopping ads on Snapchat. We talked about that yesterday with Snapchat. Warren Buffett's Berkshire exits GM and Activision bets. Ray Dalio's Bridgewater boosts stake in 3M, and then exits Apple. Bill Ackman's Pershing Square up stake in Alphabet. The best-selling sedan in America has gone all hybrid. Boeing, ticker BA, trails Airbus in October jet deliveries. Pfizer's Paxlovid linked to far higher rate of COVID rebound. Don't even know what that means. And then Adobe, ticker ADBE, may face EU antitrust warning on $20 billion Figma deal. I mean, it's just a hard knock life out here if you're trying to acquire companies nowadays. It's tough. Back in the day, it was super easy. Now, if you want it, Europe is cracking down, though, which they should. Like, American big tech is super, super, super dominant and kind of like oppressive to a certain point. So they've got to watch out for their own economic interests as well as the data of their people and the security of their people. Can we focus in? There we go. So much better, so much clearer. But just like we've got the waterfall going in the background, I hope today is a waterfall of positive experiences for you, as well as a little waterfall of fiat currency. We're going into a time where there's a lot of pressure, there's a lot of anxiety. Make sure you show love, to people. Try and be happy even when people aren't nice to you, because we know how it is around the holiday season. People are stressed out. People can get mean. Just understand, it ain't you, it's them. It is what it is. Keep it pushing. I thank God for the community that we have here, and that we're all here to draw another breath today, and I'm looking to make the most of it. So everyone have a great day. You know the drill. We're going to go in the market, see if there's some opportunity, remain patient, be ready to execute, right? And I'll see you all back here tomorrow for our next pre-market prep session. Have a good one.